Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Friday, and happy Friday to you all. Hope you guys have a great upcoming weekend here, and it's May 10th. So we got no economic news releases scheduled for today. Again, this week has been very light in terms of economic news releases, but we do got a very busy week. A lot of economic news releases packed for, and we'll be starting on Monday with the retail sales. So that will be kind of a big one for next week. But we got some manufacturing numbers like the Philadelphia Fed as well as the Empire State Index. We got the PPI number, which is the wholesale for and the wholesale inflationary numbers coming out next week. Got consumer sentiment, so we got a lot of different things coming out next week. So be prepared for a lot of news. So we'll just jump over to headline news right now. And currently, right now, the stock market's a little mixed. The Dow is down a little bit. It's going back and forth. What's going on? It seems like there's a lot of short sales going on, short sales going on, and so people are. What that means is that people are. The stock price go down a little bit, they're selling, and then when it goes down, they're buying at a lower price to take in some profit. So you're seeing a lot of that going on, which is kind of affecting us here because it's creating a lot more activity on the stock market, pulling funds from the bond market. So we'll see that here in a minute with the Japanese candlesticks with the bond market. But that's what's kind of happening, playing out right now. Even though the for the week high, we're still looking at the week high for the Dow as well as S&P. Today, also early this morning, Bernanke gave a speech and basically addressed a crowd in Chicago that with the lower rates, the Fed is also still, the central bank is still kind of looking at any ramifications, any potential issues that could result for having low interest rates. Since we had the crash in '08, but of course, earlier in 2000 with the dot-com bust, we didn't really have that lingering problems with credit and real estate prices and such. So he said that they're still kind of reviewing everything to make sure that they could be ready for anything that could be as a negative result from having low interest rates. So let's go ahead and take a look at the bond market and see what the interest rates are doing. So we see is way down. Right now we're at the 103.9 after closing at 103.88. It's not a good day today, but it's not as bad as it looks, primarily because we have what they call the bond rollover, which happens once a month. Primarily, it means that they take out mortgage-backed securities, they package them up and sell it every 30 days, and then they start new pricing for that month. So you can almost take a lot of that with a grain of salt. Even though we are down about 42, 44 basis points currently. So basically what this results is about 27 basis points. So we start off here about the 103.81 level. Yeah, 103.1. So we would have opened up here and we'd be down here to about the 103.6. Yeah, I'm sorry, 103. Yeah, 80, and it would be down here probably right around the 103. 40 range. So we would be still down here 36 range actually, 103.60, yeah, 36 range. So we would actually in reality be closer to rate in this level here, but something to still keep an eye on. The market is a little volatile today, going back and forth. It is going based off the fundamentals on the stock market. Again, this could quickly change next week. With the volatility of the markets, what we're going to see for economic news releases. But as of right now, the pricing on interest rates have climbed up a bit, as you can see with the 42 basis points. So that's taking out of the context of the 27 basis points that we started the day off lower due to the bond rollover. Okay, so be cautious here. We'll have to kind of wait and see what Monday does, but right now rates have kind of crept up a bit, almost half a point due to so when you're looking at 32 basis points, 50 basis points would be a half a point, or 100 basis points would be 1 point pricing for that loan. So this is what how we could kind of translate or put in more terms that we can understand what it would cost for that rate. So that no point rate that was yesterday would cost almost a half a point today. Okay, folks, I hope you guys have a great weekend. Enjoy yourselves, and we'll see you guys on Monday, and we'll look for hopefully some better results on Monday. Have a great day.